This is the second iteration of Crow Tribe Conversations with my good friend Admiral and myself, Admiral FLUNDER, and I'm Brian Vaughn. The reason we're doing this is because we want to make a difference to people, and we each represent some services and products that can really make a difference. But the theme today is to talk about the good, the bad, the ugly, and the awesome about each of us. And Admiral, why don't you start saying the name of what product you're talking about, and then talk about the good, and then we'll just go back and forth.
Well, the product I'm talking about is one of the most misunderstood financial services product on the market. It's a reverse mortgage. Technically, it's a home equity conversion mortgage because the product that I represent is a distant cousin of the old reverse mortgage. And so I'll refer to it as a home equity conversion mortgage and the good. So let's talk about the good, the bad, the ugly, and finish up with awesome. So the good, I've made notes because I have a tendency to get emotional thinking about my clients, and I lose track, and then all of a sudden I go down a rabbit hole and I don't know how to return. So my notes are going to help me stay on track.
We love that emotion about you, man. All right, carry on, brother.
So I'm currently working with a 74-year-old client who was fortunate enough to retire in his 50s. He's got great income, cash flow. He's debt-free. And we're designing his reverse mortgage to help provide him access to a portion of his housing wealth to replace his emergency fund and be available to him for the rest of his life, as long as he lives in the home, pays his property taxes and homeowner insurance. His home is valued at $725,000, and with a stroke of a pen, he has access to $229,000 of his housing wealth. And so that's a good thing. When we left each other yesterday, he just said, you know, he says, I keep telling my son, this seems too good to be true. So to hear a client say something like that, it just makes me happy to know that I can make a very positive difference in his life. Another good that I'm going to point out is I helped an 82-year-old widower who lost her husband just last March, and when he passed away, so did his Social Security. So her only income was Social Security. We used a reverse mortgage to help her keep her condo so she doesn't have to move. She'll be able to stay there for the rest of her life, and she's going to be able to keep up with rising HOA fees and an upcoming $3,000 assessment. And then one last one, hopefully I'm not taking too much time. I've got a friend of mine who was a long-term care agent. He introduced me to a couple who did not qualify for the long-term care because one of them has an illness, which I'm not going to describe, but this person was suffering, and the length of their life has been shortened as a result. But using a reverse mortgage, a HECM, we set up a standby line of credit for them for $233,000, and if they don't have to touch it for the next 10 years, it's going to grow. It has a growth feature to it. So then they'll have access to $438,000. And what's so neat about it is, you know, neither of them will have worked for 10 years. Income might be down, but they don't have to reapply. They don't have to requalify. The money is sitting there waiting for them when they need it. There's a question I always like to ask: when's the best time to buy insurance? When you don't need it.
Right, exactly. So yeah.
You can feel my joy and know that those goods have just made a difference, not only in those folks' lives, but in the quality of my life, because I'm able to help folks know what they didn't know.
Love that, man. Well stated. Great case examples. The example of the good, I'm going to abbreviate my side because I want this to be an emphasis on your side, but of the good about a product that I represent in the context of holistic retirement planning is cash value life insurance, of which there's several types, but I specialize in something called an IUL, Indexed Universal Life, or a casual term is a LIRP, Life Insurance Retirement Plan. And that's something that not enough people know about that. But a good thing is this is something that is available to people. Here's another way to improve your situation, and we'll kind of highlight some more of those as we go down the line. For now, let's go back to, let's kind of head off. What's an example of a bad about HECMs and reverse mortgages?
Well, reverse mortgages bad. They've been blamed for senior homeowners losing their homes. So yeah, they lost their home because they had a reverse mortgage. But the truth is, if I don't pay my property tax and insurance, if you don't pay your property tax and insurance on your home, what happens? You get foreclosed on. So it wasn't the reverse mortgage. It was the fact that they didn't pay their property taxes and insurance. Another of the bad is the amount of housing wealth available using the HECM product is based on the age of the youngest borrower. So there were instances prior to 2015 where a older husband left his wife off the mortgage so they could access more of their housing wealth. The problem was that when he passed away, the home was foreclosed on because nothing was, her name was nowhere. The home was not in her name. And so that has changed. And so we built safeguards in to make sure that that can never happen again. One last thing is prior to 2015, we did a lot of updates in 2015. We didn't do a complete review of the borrower's credit history, their debts, their income, and in our application process. And that actually resulted in people losing their homes to foreclosure because if we did that doing that financial assessment, let us know if they're used to paying their property taxes. They're used to paying their insurance. You know, a lot of us, our property tax and insurance is in an escrow. But a person owns the home free and clear, and they're just not used to doing it. Well, people, because they didn't in the habit of doing that, or the one member of the husband and wife couple passed away, the one that was used to paying, things kind of, so that was one of the bad. So we've come up with something called a financial assessment where we're going to examine all of the borrower's sources of income, their credit history, to ensure that the reverse mortgage is a sustainable solution to a better retirement.
Got you. All right. I can relate to some of those things. So it sounds like some of the ways to maybe paraphrase what you talked about, that there are some limitations to a HECM reverse mortgage. It doesn't do everything, but more to the point, it's got to be designed properly through the proper due diligence and so that it's structured and all the right expectations are set. Is that kind of a fair way to say, paraphrase what you just said?
Yes, it does. In fact, when you're talking about that it doesn't do everything, it's actually a great complement to a plan that maybe you've set up for one of your clients. This is an addition. This just strengthens whatever program they have. It makes their overall retirement program stronger.
Quite so. In fact, that's among the reasons that my other business partners and I, it's not unusual for us to encourage people to consider a HECM. We don't do that. That's why we need people like you to present that and people in other parts of the country. But that's one of the ways that helps people have, as far as what we're looking for, is ways to strengthen their retirement and what resources do they have, and to understand a properly designed HECM. So again, that's quite so. It's something to complement what we do. And I don't do that. I don't get paid for any of that. Just want to find great people who I can trust and work shoulder to shoulder with, like you, to go make that happen. So that's why we're here. So okay, here's the short version of the bad about IULs, or cash value life insurance, or LERP. All of those things, you're gonna hear those different terms, that they're misunderstood. Similar to HECM, they're often misunderstood, and even worse, they're quite commonly mischaracterized. There are critics in the industry, financial people who one of the most notorious is Dave Ramsey, one of the biggest financial radio guys. He pisses all over this. He says, get term and invest the rest. Well, he's wrong to say that, because he's also saying that's the answer for everybody. Similar to HECMs, we don't recommend HECMs to 35-year-olds, for instance. That's not appropriate. You got to have the right audience, right situation. But a LERP, a life insurance retirement plan, in the context of other pieces in the right balances, can be done right. So I'm going to actually skip ahead to the ugly. The reason there is an ugly is that there are the people who have given cause for the Dave Ramseys of the world to criticize IULs. Is there are people who design these inappropriately. It's possible to do it inappropriate. I've come across other financial people It seems to be in particular, people who only know life insurance, they don't know the rest of the story. And they design these, you can design these to benefit the salesperson more than the client. Among the things I make clear is that I've been a securities licensed financial advisor, done the portfolios, learned all the pieces of stocks and bonds and portfolio and insurance strategies that some financial advisors do not recommend. So there's a reason I like to do that. And it's because it does some of these things that HECMs does. When you have the right portion of that is in these kind of financial strategies that provide better protection, better confidence, better financial lifestyle, it's a good thing. So I've skipped ahead to the bad and ugly. There's got to be an ugly. I know you've got a similar story about that. Maybe you've already referred to it in the bad. What's an example of an ugly about HECM, reverse mortgage?
Well, there's a gentleman by the name of Jamie Hopkins, and I've got to refer to my notes because I'm going to be quoting him, and I want to be sure that.
All right.
So he's a professor at the American College of Financial Services.
Mm-hmm.
He wrote an article for Investment News back in 2018, and he states that the vast majority of financial services professionals still fail to incorporate home equity planning or reverse mortgages into their practices. Jamie further states that over the past few years, he's been very, very outspoken about the need for financial advisors to incorporate reverse mortgages into their practices, especially those acting under a fiduciary duty of care of doing retirement planning. And he says, yes, this is a failure, because in his opinion, he says not including home equity and reverse mortgages in the financial planning process is the largest failure of the financial services profession at this time. He further states that while many advisors do review the existing mortgage and perhaps recommend refinancing, this is usually where the advice stops, leaving a wide range of factors affecting the client's situation unexplored. And the last piece of that is other professionals, such as real estate professionals, estate planners, and other folks that have access to helping us manage our funds. They simply just don't want to take the time to find out what they don't know. So for the realtors, does it make sense to set up a 30-year mortgage for someone in their 60s that's going to be strapped with a required mortgage payment for the rest of their lives? So I think that is the ugly. And then when we talk about the awesome, the awesome is the combination of all these things. Us having this media, this platform in order to talk about these misunderstood products, that's really, really awesome. And then what that means that our goal at Fairway is to change the way retirement is done in these United States of America.
You know, Leslie, we did that, and that's not quite the way we thought it was going to flow, but I think it works out even better. This is part of the reason people got a couple of white whiskers who had some experience. You think about our motivation to help people. You've talked about your story in our previous conversations. You came out of retirement to do this because it makes such a difference. Well, I didn't come out of retirement. I plan to do this through retirement because I can scale it, but I want to make a difference. And these are things, the reason some other financial advisors are just trying to make as much money as they can, rather than how can you make a difference. Tools like a HECM and tools like a life insurance retirement plan depart from the financial advisors who just want to get piles of money and charge their 1 or 1.5%, 2%, because that's how they get paid. And that's what I've shared this before, that's why the people haven't heard about it. Other financial advisors do one thing, they get piles of money, don't want to distract people or confuse them with anything else. The fact of the matter is, and the way I and one of my business partners, Scott, he's 60, I'm 64. We can relate to people who, hey, I got this housing wealth. How do I utilize that? Hey, I have these other things. What else can I do? What have I not heard of? That's what we're trying to get to. So the awesome, both of these things, when they're folded in, the awesome for LIRPs, life insurance retirement plan, and the awesome for HECMs is when that's part of an integrated strategy. And when each of those are designed properly, and it's in the right balance with the other things that people have heard of, like they've got their IRA or their 401k or their pension or their, you know, taxable investments, whatever that is. What's the right amount to have in each of those categories that helps you get to, and this is where I want us to, this is what we both emphasize, is these are both investment strategies that create a tax-free stream of money or tax-free bucket of money. A HECM, as is an LIRP. That's what we have in common. And the reason this is so awesome is because tax rates are going to, they have to just maybe even double, is what some people say. So if you've got a stream of money, you don't have to be thinking about, you know, double the tax rate on zero is nothing. That bucket of money is not going to be influenced by higher tax rates. So I stumbled over the punch phrase I was trying to get to, but I love both of these kinds of things, and I want us to keep telling the story, sharing the message that we want to help people have that tax-free bucket from which you can get a tax-free stream of income that helps people just live a better life. And what we both provide is, especially in retirement, more money, more protection, and more confidence in your retirement and your financial life. So getting into the punchline similar to that, land the plane, brother.
Well, you know, the truth of the matter is that without financial stresses, then we're going to live longer. Now, my wife and I, we have a reverse mortgage. How can a person over 62 represent a product and not take advantage of it themselves?
Right.
And so kind of lost my train of thought because when I just think about what this great thing that we're in, that's too good to be true, that if, you know, I told you the circumstances where I met the gentleman that introduced me to this product. It's almost like I was, well, I'm not going to say I was born to do it, but it's really a major part of my journey. And I think you can see how excited I am about it.
You're saying that is the compelling, when you did it for yourself, realize, man, I want to tell other people, right?
Yes.
That's essentially how we got to be doing this. So I too have a life insurance retirement plan and part of my life insurance and financial strategies. So right there with it, brother. So let's wrap it up today. We're going to have another next week. We're going to do this again, folks. And I'm going to add the email contact information for each of us. And I'm going to invite anybody who's got a question or wonders, you just want to think out loud, whether you want to have just Admiral or just me or both of us together, we're happy to do that because we've got a similar passion. We want to make a difference in people's lives. And whether we work together or you work with just one or the other of us, doesn't matter. We want people taken care of. So sound good?
Absolutely. Absolutely.
All right, my friend. We'll see you next time.
All right. Appreciate your time. Appreciate everybody's time. Let's make it a greater day.
All right. Cheers.